Hey guys, my name's Jose, and today we're going to take a look at the letter NVIDIA sent to its investors earlier this week, which caused the stock to drop. I'm going to take a look at the numbers shown on the letter and compare them with past data. Before we begin, don't forget to subscribe to get updates on new episodes and other videos. So let's begin. The most important thing was that NVIDIA dropped its Q4 guidance a few weeks before their earnings report. The cause for drop in guidance were for the following reasons. 1. Data center revenue came short due to a number of deals in the company's original forecast that did not close last month. So this is not bad news if during earnings they can show that these deals are still on the table for Q1 of next year, but if the deals are completely off the table, then this is definitely bad news for the data center revenue. 2. They ended up blaming the macroeconomics of the world, mainly with China, for their loss of sale. And 3, there was a decline in gaming due to excess mid-range inventory following the crypto boom. So after this crypto boom, we have so many NVIDIA capture cards, NVIDIA video cards on eBay, Amazon, and all these stores that inventory is dramatically high compared to previous years. So now let's talk numbers real quick. Revenue last quarter was $3.18 billion. Now let's compare it to the original guidance of Q4. So Q4 was originally supposed to be $2.7 billion of revenue, which was already lowered compared to last quarter by 15%. But the new guidance is even worse, at $2.2 billion, which is 30% lower than last quarter. Many people argue that Q3 is usually better in revenue due to it being the time of the holidays, but let's compare it to Q4 of last year. So Q4 of last year was $2.9 billion. So the original guidance was already lower than last year's Q4, and now it's even much more. So revenue itself, it's looking pretty bad for NVIDIA. But let's talk long term now. Let's talk year to year revenue. So year to year revenue for last year was $9.71 billion. Pretty great for a company. It's been increasing over time. So now let's assume that this quarter of Q4 would be $2.2 billion of revenue, which is what they said will be. So adding up the past 3 quarters of this year, that would give revenue $11.71 billion. So that's really good. That's an increase of about $2 billion year to year date. So that's over a 20% gain. But assuming that 2.2 guidance for Q4 is going to lead the future, we can expect next year to be worse than 2017. So that's something to keep in mind before. Next on the letter, they talk about operating expenses. For last quarter, operating expenses was $863 million. This quarter, operating expenses will be about $915 million, about 6% higher in operating expenses with about 30% less revenue. So their operating expenses are increasing, but their revenues have decreased. Again, not looking good for NVIDIA for the earnings call this. Finally, the last thing they talk about in their letter was their gross margin. Their gross margin was originally supposed to be around 62%, which is the average it's been in the past few quarters, and it dropped down all the way to 55%. The last time the company had gross margins of 55% was Q3 of 2015, about 4 years ago. So now we can see why NVIDIA dropped so much last week. 1. The revenue dropped about 30% compared to last quarter. 2. Operating expenses increased by 6%. And 3. Their gross margin dropped down to a level that has not been seen for the past 4 years. So what did you guys think about the letter? Make sure to leave your thoughts in the comments below. Also, don't forget to subscribe to get updates on new videos. Finally, thank you guys for watching and have a good night.